morning, everyone, and welcome to the European crossover webinar. And things have kind of stayed pretty much in the same area right here, at least when it comes to the dollar, and you're looking inversely with the euro, and dollar yen itself has even stuck around here close to this 1080. Let's move this out of the way. Not a whole lot has changed. Let's go on and take a look here with the cash dollar index. It does seem like we're at a point now when you look at it. Well, we could finally start to give a little bit here. You're seeing that here as we've made one of the areas that we've been looking at was at 96.72. See if we still had that here. Actually, it even moves up to 96.79, and we haven't been able to make that jump because we thought we'd make this run up in here. And the thoughts were also with the euro is that we had some unfinished business here at 1380. Well, it looks like maybe if the dollar is going to start to roll or push lower, if that is the case, we'll be able to get this euro up in here to this 1380. And we'll see what happens a little bit later on today. But a couple of days ago, we were short and looking for 1323 was the low. I think it was at 21. And we just kind of languished in this area. We haven't moved really at all here with the euro. It's gotten as much of a tight space it was, it's even become even more tight. Look how tight the cable has become. There's almost, to extent, it's not, there's almost getting to a point where there's almost no volatility in some of these pairs. Dollar CAD itself has moved a little bit higher on some remarks from Polos, and we'll get to that. The only mover here has been, we have seen gold come off a little bit here, dip down in these 1320s, but that's only been the real mover. Although the bigger story we have to go on and say has been crude oil. This has been really quite the surprise. I mean, we've held up in here. The one area that we've been looking for since the beginning of the week was 57.18. We did this on the Asian analysis at the very beginning of the week, actually over the weekend. And this is the area we're looking for. We've made it up there. You know, I would have thought we would tag that and probably start working lower, and we just simply haven't. I guess the same thing with the talks. Everything is focusing, and, you know, until then, everything looks rosy. But we've mentioned this several times with crude oil. The way to trade this thing is really just only on the technicals. And certainly it's been in a buy mode. And one of the things we mentioned last week, you're looking on a weekly chart, we'd closed above the prior week. You see right here? That's why I pointed up here to 57.18 as the next key area as a target. We'll get back in here into the daily. I thought we might make it up to 57.18 and then maybe start to edge back a little bit, but we've kept a very, very good bid into this area. And S&Ps are still holding up relatively well. We have seen this market finally ease back a bit, but the key area right here is going to be up in here, this 27.84 here. And Boons, after a pretty good little pullback here in Boons, working a little bit higher. We did get some weaker German iPhone numbers. Prior was 99.30 and 98.50. We could continue to get weaker numbers in here. Even the Reuters poll showing here, same thing, is just little by little, just a little bit weaker on the current, even on the current conditions, also weakening. Everything's a little bit weaker here in the German IFO numbers. We do have Eurozone inflation coming up at the top of this next hour. When we look into the U.S. data, really nothing at all coming up here into U.S. data. We do have Canadian budget, and then that's it. So we could find ourselves still in a very tight range here when it comes here with the dollar and the euro. But we'll see how that plays out. With that, we'll go on and take a quick overview of the news. And it is relatively very, very, very light. We'll get to that real quickly, touch on it, and we'll just get into the analysis, which once again is when you live in these tight ranges, you have to wonder how much is the analysis going to change, but we'll see what we look at in overview of the week. Revolt brews in no Brexit deal showdown. After some just suggestions earlier in the day that Theresa May could be ready to send a tweaked Brexit deal back to Parliament for approval next week, Downing Street finished Thursday by suggesting they did not look likely. If no fresh vote is forthcoming, that puts the focus squarely back on whether the attempt by some lawmakers next week to pass an amendment ruling out a no-deal Brexit will succeed this time. The Guardian believes May is facing what's called the most serious cabinet revolt of her premiership, with up to 25 members of the government prepared to back the amendment that would require her to extend Article 50 deadline for leaving beyond March 29th. That would mean in turn she would have to sack them. How significant a moment this is in the whole process is hard to judge. Clearly, a mass cabinet sacking and a delay to Brexit are pretty important events in themselves, but would no deal then actually be off the table? That would depend on a number of variables, including the length of the delay itself. A short one, weeks or a couple of months, would merely kick the can a bit further down the road. The suspense over whether the United States and China can put their 7-month-old trade war behind them has slightly obscured the fact that Europe also needs to sort out what terms its future relationship with Washington will be. Donald Trump has insisted America deserves better terms on trade with the EU, whose negotiations have turned in said that they can discuss industrial goods, including autos, but not farm products. Trade ministers from various EU capitals meets today to fine-tune what stance the European Commission should take ahead of a possible start of negotiations proper. Moldova is one of those countries by which of its geography has long felt the tug of both east and west. This Sunday, elections there are expected to produce a hung parliament. Moving on to the markets, a late rally in Shanghai stocks enlivened otherwise glum overnight trade on world markets, with optimism about an imminent trade deal between the U.S. and China negotiations in Washington this week. The only obvious driving force behind gains on almost 2% in the last couple of hours, the day there. Shanghai stocks ended up 1.9%. Also, Chinese Vice President Liu He will meet with President Trump and the White House on Friday. Sources familiar with the negotiations told Reuters that MOUs would cover forced technology transfer and cyber theft, intellectual property rights, services, currency, agriculture, and non-tariff barriers to trade. Elsewhere, Washington, Wall Street ended in the red overnight in a mix of downbeat economic readings, mostly in capital good orders and a manufacturing contraction in the Philly Fed's business index. The factory hit mirrors contractions in the European and Japanese manufacturing sectors this month. Currency and bond markets were quiet first, with European traders looking to a speech by ECB Chief Draghi later on Friday and Fitch's review of the Italy's sovereign credit rating. Eurodollars was a touch higher at 13.44. Treasury yields, a dollar, and benchmark oil prices were all little changed. Sterling was a fraction lower against the euro and the dollar, with eyes on the last-ditch talks between the UK and Europe. And moving on, we did see the Canadian dollar weaken. Well, weakens with oil as Poland signals no rush to hike. The Canadian dollar weakened against the greenback on Thursday as lower oil prices offset stronger than expected domestic data from the Bank of Canada. Governor Stephen Poloz continued to signal a more gradual pace of future rate hikes. Poloz indicated he was in no rush to resume monetary tightening, suggesting that while interest rates needed to move up into a neutral range of between 2.5% and 3.5% over time, the path that back was now highly uncertain. Polo's comments didn't add anything new, said Greg Anderson, global head of foreign exchange trading at BMO. The price of oil, one of Canada's major exports, sank below 2019 highs as U.S. government data showed a sharp build in crude stocks and record production. And on to Brexit. Concerns buying to sterling share of the giant London FX market. This one has a little bit more juice to it, and we'll just read it only because it affects FX. As Brexit talks drag on, the sterling trading volumes in London, the world's biggest forex trading center, are languishing well below long-term averages, with long-term investors and sovereign players set to stay on the sidelines until the crisis is over. Trading volumes in the pound have inched higher since the start of 2019. That drop combined in volumes, a clear sign of investors' reluctance to buy and sell British assets, may be contributing to sterling volatility and the why currency seems to again to have been vulnerable to exaggerated swings on relatively minor headlines in recent weeks. A lot of people have increased exposure. Those sterling volumes are about 40 to 50% lower than Brexit, roughly on an average, says Fabrizio Russo. Dollar pound remains the second most traded exchange rate in London, but average daily turnover dropped to 324 billion in the 6-month period ending October 18 versus 351 billion the previous period ending April. The size of the broader currency market has expanded in the past 4 years, but the pound's percentage market share has broadly stagnated. The share of pound exchange rated declined to 12.4% in October. Before the Brexit referendum, euro-pound share was 2.6%, peaking at 2.9%. Such has been the decline in the offshore-traded Chinese yuan. Instead, more investors have turned to derivative markets to hedge sterling's bet, preferring positions here rather than the volatile spot market. Because the pound has become more susceptible to Brexit headline news and some institutional investors have taken to the currency towards forwards and swaps market to execute their currency needs. For instance, CLS data shows turnover on sterling swaps rose 202 billion in January from 188 billion. Of late, the expectations of a Brexit solution fueled some interest in sterling. Last year's average was 62 billion, but pre-Brexit daily volume averages were as much as 100 billion and have fallen 30 to 40% across the board, barring a brief spike in September. And the dollar retains gains. Well, the high U.S. bond yields underpinned the dollar on Friday, while its Australian counterpart steadied after its recent sharp slide on upbeat central bank comments, easing concern about China's ban on Australian coal imports. The dollar index against a basket of 6 major currencies were little changed at 96.60. However, the greenback's gains were capped after Thursday's soft U.S. economic data, including an unexpected fall in core capital goods. The currency market is entering a phase when it's become a little numb to political developments. It's back to fundamentals, particularly in the dollar, with each data release until next week's non-farm payrolls report likely to slow but build directional cues. The year was at 1340. Traders are watching out for Germany's IFO business. We talked about that earlier, coming in a bit weaker. And the yen barely budged after data showed Japanese core consumer prices rose 0.8. And the Australian dollar was up 0.1 after sliding more than 1% to a 10-day low on the previous day of fears of a ban on the country's coal by Chinese port would hurt Australians' already slowing economy. And lastly, with the euro near a 2-week high, euro holds a near 2-week high on Fridays. Investors waited for the signs the eurozone economy is faring. We talked about the inflation coming out, and also rebounded after China denied it had banned imports on the country's coal at the Dalian port. In the end, mainly the prospect of the stuttering growth prospect driver of Germany that's contributing to the uncertainty regarding the euro outlook, says Esther Reichelt. Traders are watching for Germany's IFO Business Climate Index later in the session. Well, we did go in and get that, and they came in a bit weaker. And also the Australian dollar rebounding after tumbling more than 1%. Reported the Chinese port of Dalian had banned imports. China said on Friday imports would continue, but customs have stepped up checks on foreign cargoes. The dollar weakness against a basket of major currencies. Thursday's economic data showed an unexpected decline in core capital goods index. So with that, let's go on and move into the analysis. And we're kind of, for the most part, we're stuck in neutral. At this point, it looks like we're even more stuck in neutral. If we weren't stuck in neutral, well, we're stuck in neutral 2 times over. Now, Esther Reichelt said that really what they're concerned is that the driver in Germany because of the weakening there. And as I mentioned here, we got the Germany IFO numbers, and they came in still weaker. Here we had 99.30. Reuters poll was supposed to be for 99. Well, we came in at 98.50. And with the current conditions, 104.50 last time, we've dropped to 103.40. And we just keep turning even lower here. Even in the expectations, same thing. Things just continue to appear to wind down lower. And once again, we talked about that we thought we may have some unfinished business here in the euro towards 1380, but like I said, it's the pull of the pair here with this weak economic data that keeps the euro from jumping. Really, it just seems like it's just going to, whether or not we get a matter of stops. And I thought we could make a run up to 1380, and then we would start to rotate a little bit lower. Well, we didn't make it up quite to 80, and we're just kind of stuck in neutral here. So we'll take a look where we stand. And probably we're not going to see much of a change when it comes to these levels here. So the resistance continues to remain 1389. Now, we may be able to make the case that it's even tighter than that. And that may even be the case. A case could be made that it's right there at 1366, but I don't think we want to be caught with our pants down if we do get a jump. And let's say the dollar slides back. Well, we're going to make this run up here to 1380. 1380 is the pivot right here. But as we had marked already off, we have 1389 right here. We had 1312 as our bias chart support. I think the low was, what was it? It was 21 or something like that. So we didn't make that dip. And here's my 1312 here. You know, what's making this analysis, I'm going to say it's tougher. It's just that we're not going to see much of a change. Is look at this tight range. You know, we've been in a fairly, well, I wouldn't say real tight range, but, you know, we haven't been able to move or break out. And just as it seems like we're starting to break out, we could really make a run, might even make it up here to 1392 up in here. We've just gone in and just stymied right in here. There's just almost no movement here. So, but if we do get that, then we'll quickly make a challenge up here towards 1389, but we are really stuck in neutral. And we have no U.S. data coming out, so there's nothing, and we just got past the IFO. We do have inflation, Eurozone inflation, up at the top of the hour, but boy, this is really in a very, very tight range here with the euro. I'm not sure how it's going to go and resolve itself, but we're going to stay with those resistance and support levels, which have not changed from yesterday now. It's going to be 1382, 1389. That will remain the same. Well, you know, when you get tight like there's not really no head or tails you can make of this. And this is very indicative. I was going to point out here, you know, how I like to use the exponential moving averages on the 30-minute to give you an idea where the momentum is going. You can see where we cross back up, then stay with that momentum. But now you can see when you get in a tight market like that, look at this. You're just all over the place. You see that? And that's where you really don't want to focus on the 30-minute, at least for a momentum change here. We're still a little bit on a slight bias here on the 2-hour, although generally I don't use this on the 2-hour at all. I mean, sometimes you'll see something where how move will stay and you could still use it up against that. But for the most part, I just use it on the 30-minute. The daily is always a key driver, and it does go in and help when you start to see, which we saw that, remember, in the dollar index. Remember when the dollar index was making that move to those back to the highs and it was still in sell mode, and we eventually saw it come back down. It never did flip into a buy mode in that sense, but primarily just use it with the 30-minute. But you're not going to be able to use that when you get in these very super tight ranges. Now let's go move into the cable. Well, yesterday we had our resistance at 31.37 with the low at 30.30. And we're moved down. And right now we're even below the 30.30. Well, let's take a look where we stand here on the daily. Well, I thought that was an opportunity for us to move a little bit higher. But like I said, we're in this dearth of volatility. And even as wild as the cable has been at times, it's even quieted down here. And it's just like, boy, this FX is something else. This, true lack of volatility. Resistance at this point is going to be right there, 30.62, which you can see here coming across. That kept it right there. You see on the closing basis. So we'll go with 30.62. Now we had a support at 30.30. Obviously, we're even below that. Support now is going to come back to this area here, this 29.87. We'll pull this back. See if we see anything different on the 2-hour. Well, 29.80 is at 38%. We've got this level here, which is right there, 29.74. Thinking that we can slide a little bit, we're going to go with this 29.80 is at 38%, 29.81. I'm liking this area right here, 29.70, 29.74. No, we're still sliding back here in cable. Let's go move into the Aussie dollar. Well, as you mentioned, China said that wasn't true about those the ban on the coal, but the damage is already done. We saw look at this here, and this one's in daily. We took it all these days. You do that kind of damage, it's hard for the market to turn around and come back. You can see where resistance comes in right there. You see that 71.20, but we'll look on a 2-hour to get a little bit closer look. Looks like that's just about where they ran out of gas, right before the 71.20. We'll give it just a little bit more room right there. You see that coming across here? Boy, that's tight as a drum right there. Here's that key 71.40. And to know exactly where, the risk level is, it's going to be this right here, this right there, 71.42. Just a hair right below there. We'll call it 71.35. You can see that coming across. Especially, now people are looking for a big, big move, much bigger over time with the Aussie. Support comes in here there at 70.61. We're going to move in now to the dollar Swissy. Boy, look at this tight range here in the dollar Swiss. Let's go move into the 2 hour. Ever since this pop, we've just been drifting a little bit lower, and if you look at this, amazing. We've been essentially in a 17 pip trading range for 1, 2, 3, 4, 5, 6, 7, 8 for 16 hours. And really, until we got this break, the range was only about 13 pips. Amazing. Resistance will come in there at par 30. Well, we got par 32. We'll keep it there. And support right there, 99.70. So no changes here, and that's what I'm saying. It's making it a little bit tough here. No changes here. We're just not seeing any volatility. And yeah, I think Blake made a good point. Blake made a very, very good point yesterday on the Face webinar. And we're just not going to go in and see this volatility until we get something to happen here in the SPOOs. And we've got one heck of a levitation act here. Let me tell you that. Unbelievable here. And the reason I'm focusing on this right now with the SPOOs, I mean, we're not even at the dollar yen yet or Aussie yen, is, I mean, I think that Blake hit the nail on the head, is that as long as we're not seeing any movement and we're stuck in the, this very tight range up in here, this upper area here with the SPOOs, we're not getting any break. And until we get a break one way, I don't think they're going to rip, although they've held up very, very well. And they're actually holding up against this pivot. And we're going to have to get some type of catalyst to go in and drive us, into some volatility. And it looks like the market is just holding on. It's the same thing we're seeing it across the board. We mentioned here in the Brexit too, is that they're saying, a lot of current players have moved to the currency swaps and just saying, you know what, I'm not going to bother with the spot until, so it's not only Brexit, then you have the U.S.-China talks. Now we're looking at potentially U.S. and European, and it just seems like it's one thing. If it's not one thing, it's another. Government shutdown, and we're just not getting any type of catalyst. I mean, who knows where the VIX is at this point? I don't follow the VIX closely, but boy, it's got to be record lows almost. Let's go on and move on now to dollar CAD. Well, Polos made his comments. That's why we got the dollar CAD to back off, because certainly crude didn't back off very much. It's still way up here. Same thing here, up in here in the stratosphere. But we did get comments out of Polos, and he said he's in no rush to hike whatsoever. And yeah, that's smart. I mean, I know why people kept thinking for a while, oh, they're going to hike, they're going to hike, they're going to move on. And I don't see what the point is to go and do something like that, because basically you're shooting yourself in the foot. So we rebounded and we got back above here, above 32.12, but same thing, going nowhere fast at this point, although we had strengthened, obviously, in the CAD, moved lower dollar CAD, inversely speaking. Let's go and take a look here on the 2 hour. The thing is there's just not a whole lot of movement. We're getting some here in the dollar CAD, though, although it's drip, 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 and then a little quick movement. We did go on and get the spike, came off, like I said, really off the Polos comments. There were some concerns about oil, but really it's more about Polos comments. So when we look here on the dollar CAD, we had 32.34. Well, we made it up here to what, 32.42, and we've rotated a bit. Resistance is going to be back here to this little pivot, and that's going to be 32.57. Although we've dipped lower, but if we are to get a move higher, it's going to be 32.57 at this point. We had this area, this one before, from the day before. Remember, 31.52, which pretty much caught the lows or close to it. Support now is going to come in right there at 31.82. And with that, we'll move to the dollar mix. I thought we were going to come down here to 61%. I'm really disappointed. As we mentioned yesterday, we'd had this resistance we had posted from last week, and I thought the market would take a pause here at 1946, confluencing with the 161% of this move. I thought we'd only back down to probably about here, and then we'd try and work hard. Well, we really came lower, and I thought that as much pressure that was on it, I thought we'd come down here and take out 1911. Was looking to buy right at 1908, and well, it came very close. I guess I got a little bit too greedy going for, and I thought we'd take out the 1911, dip down right here, right there. It was nice. Since then, we've had a pretty good little rebound. Very good little rebound here in the dollar mix. And one of the things we looked at was that, and we're looking at it on the 2 hour, other than this being oversold, it's hard to get a little bit of rhyme or reason on this thing on the way up. I talked about that. We've got a pretty good rebound off of this level here and made a quick beehive right here to almost 1931 before paring back a bit. Resistance Well, we came back up in here, and there's that resistance level here. We actually ran out of gas at 1931.00. For right now, that's going to be our resistance right now. 19. There we go. 19.308. This is a little bit all over the map after such a huge sell-off. So I guess that the expected rebound isn't surprising. They made it all the way back up here. Although that's a bit of a stretch here on a short-term basis. Support's just going to come in right there at 1921.9. So we are seeing some good little volatility in the dollar mix. You know, Blake made a good point, and I'm thinking about going the same way too. Is he said he hasn't even traded the euro and he hasn't traded the cable in so long. We're just not seeing the movement here, and with the euro here, and I don't mean to be all over the map, but it's very, very quiet trading. So let's go and put back in here. So apologies once again. Don't want to be thought about as going all over the map, but as I mentioned before, you know, we've been in a relatively tight range in here, but at least we're bouncing around a bit. Now, look, this is just really tightened up. I mean, look, it's just unbelievable how quiet it is, and probably gonna go and turn my thoughts elsewhere. I always love to trade the euro because I don't want to say the moves are so predictable, but even intraday scalping, you could get to kind of a feel. And I tell you what, I'm losing it more and more each day, not trying to. Other than I thought we'd make that move to 1380. And I kept putting in the analysis some unfinished business at 1380, and I really did think we were going to make a move to 1380, and then we would rotate lower. Maybe we'd get up to about 89. I did not feel that we were going to bust out after the minutes and come up in here. I thought we'd come up to this point and they'd say, oh, wait a minute, the reality of the Eurozone, it's still weak, and then we start to rotate lower. Well, we came up short. It looked like we might make one more bounce up in here, and then we came lower, but we're not breaking. We didn't make it up down here to 1312, and we were just trapped. And it almost seems like the same situation now, where I think we have to turn my attentions and focus on other pairs, including the Aussie yen, even though that we're not seeing the big moves in the equities. But I think for right now, you're just not seeing these movements here. Nor in cable to a certain extent. Well, anyway, let's go and move into the crude oil market. Here's another one that has actually been a big mover, but now we've gone very, very quiet here. And to get back here into crude, as I mentioned, the way I came up with the 57.18 was because the prior week, you can see that closed above this 55.25. So we knew we were going to go higher. And the initial target I came up with based on the daily was coming across here at 57.18. You see right there? And that's where we went to. But I myself even thought, although there's the opportunity for them to work even higher, I thought once we got here to this 57.18, we'd rotate lower. And that has not been the case. I thought there'd still be the upside bias, but I thought we'd rotate lower. It has not been the case at all. So we're still keeping up here at this upper level, and I know that a few people in the chat room, they're usually saying, "Hey, oil moves up on Fridays, it moves up on Fridays." Well, it certainly looks like it would probably want to keep that upside move here. We're looking on the 2-hour chart, and certainly we're still pushing up in here. Well, resistance, we're going to stay with the 57.18 for now. No changes there. Although we can still probably move beyond that. I thought we'd dip a little bit further here, make a move towards this 56.13. Well, we got as low as what? Well, 56.29. If we're able to break a little bit lower and rotate, probably not the case. It's going to be that, once again, that 56.13. So we'll keep that as our bias chart support. Once again, like I tell you, not much change in here. A lot of these resistance and supports are staying exactly the same. Let's move into dollar yen. Well, I got short late in the afternoon. I covered all mine on this dip down here. Was it, I think it was 65? I had on, I think I showed y'all on a 5-minute chart. I had some support there. Hang on one moment. And this was hanging up there very, very well also. Let's take a look here on the 2-hour. Same thing here. I mean, just very, very tight ranges. Look, we did get that dip in here. On a 5-minute, I had 65. It looks like we did make it almost down here to the 2-hour. But that's crazy. I mean, you think about it, you know, these moves are getting more restrictive and more restrictive and more restrictive here. To me, it would have looked, although the S&Ps are doing well, I thought we'd probably end up breaking down here. And look, we're just back up to 80. Not that we've moved a whole lot, but once again, like I said, this market, you can see here we got this trend line here is just hanging on here, and just a dearth of volatility that we're seeing here. Resistance. I mean, one of the things that we did when we did the Asian analysis night before last, not last night, but the night before, we were talking about the dollar yen just looking for an excuse to get above 111 and eventually get up to 111.44. Well, I think we kept our resistance here at 1103. Let me check here. You did. We're going to keep this for 1103. Surprise, surprise. We're not going to change it. I think you can see this market just drift higher and, you know, potentially squeeze some people here if it wants to 95, and the real resistance isn't going to come up till 1103. So 1103 is going to be our resistance. Support, well, we're going to tighten that up just a bit here, and sounds crazy tightening it up because it's not even much of a tightening. We'll move it up to par 47, par 40, well, not par 47, but 1047. As much as I've tried, I've not been that much of a fan of the cross rates, but I tell you what, going to have, by no choice, going to have to move into these cross rates. Speaking of cross rates, let's go and take a look here at the Aussie yen. Well, we had a resistance, our support is 78.34, and that's where they went to, and that's a 61%. Resistance, you can see it right there. And we'll So resistance is going to be right there at 79. We actually even had it there because it really is 78.99. So we'll just go on and keep that here. A lot of big changes, as in no changes. You can see here we came right in here into this support level we had 78.36. That confluence was 78.34, which is a 61%, which is exactly where it went to. So until that changes, we'll go with 78.34, which is where they went to, and that was our surprise again. That was our bias chart resistance support from yesterday, which it went and held at that area here. Let's go move into the cash dollar index. These ranges, look at this. These ranges are just getting tighter and tighter. You know, if you look at some of these ranges, I mean, obviously this was just a one-way train, freight train, but on the way back, look, even right here, look here, look at these ranges here. Obviously a very wide range, and then look, we're getting more restrictive, and we don't even have any U.S. data today, so it's just unbelievable. We're going to go with surprise. It's going to stay the same, 96.79. Just above the key 96.72. Support 96.34, just above the pivot. And I don't see any reason to change it at this point. Actually, we will drop it down to the pivot, which is 30. So we'll go rotate it. So big whopping 4 pips. Let's go move into gold. I haven't traded gold in a while. I'm not sure why. I just haven't been focused so much on FX and probably just, I mean, it's gone to one direction, and I would have thought we would have taken a pause at 1334. We had the 1341 level here, but I thought we would have taken a pause at 1334. We did jump up in here, and then eventually we ran out of gas. Had almost like a little gravestone doji. Obviously, we saw some follow through and came back. Here's our 1323 level. That was actually, oh, we actually had 1327. Thought we had 1323, so we gave it a little bit of room here. We'll go to the 2 hour for some additional support here. $13.19 is the 61%, and an extra little dip takes you right there to $13.18. So let's call it $13.18 for support. Resistance will be right there, 13.29 for resistance. You can see that right there. So it's 13.29. And with that, let's go move into the blends. Well, on a daily, the resistance is right there at 66.41. Let's take a look on the 2 hour. is right there. 66.33. 66.33 is a resistance for today. And there's that 65.95 that we came with. And that's going to be support. We're going to keep that for support, 65.95. Let's go move into the DAX. Marching in time with the S&P. We had 11,451 and no change. I don't see any change here. 11,451 here on the DAX. We had 11,359 as our support, and that's going to stay the same. 11,451. So the same 451. You can make the case right here 463, but we're going to keep that 451 and 11,359 on the support right there. And you can see Euro's not even moving very much. We'll take a look here with cable. We're holding right about the same area. We do have inflation news at the top. Here's that 29.80. We're looking for 29.74. 29.80 is going to be the 38% of this move here in cable, which will confluence here with this 29.74 coming across. Right here for support. Well, on a lack of volatility day and no U.S. data, we do have Canadian budget due out later. We'll see what kind of volatility we get, but like I said, it's this dollar yen is dollar yen. This euro is getting tighter and tighter. I don't need to tell you that, but this is unbelievable how tight it is. I've been trading for years, and I've never seen a time like this where, you know, other than holiday trading, where, for especially not only time, but I mean, obviously extension as for how long this has lasted, but we are just simply not moving anywhere. And look at this, it's just getting tighter and tighter. So we're going to get the bias chart posted. And good luck trading, and thanks for joining us here on the European Crossover webinar.